Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Monday, April 25th. It is 6:34 in the morning as I'm starting the video. And as always, please run your player at 1.5x. Quick look at futures. Bitcoin down 2.5%, oil down 4%, gold down 1%, copper down 2.5%, and equities hanging in there. I'm going to call it down 1%, toggling on either side, really between like 0.75 and 1.25% to the downside. The good news is that there wasn't a wholesale collapse overnight, which is what I was not planning on. Just figuring we get more downside follow-up from Friday. It's down a little bit, but not a whole lot. Over on the macro front, not a lot today. We do have some readings out of the Chicago and Dallas Fed. Earnings is really going to pick up this week. Today we've got, before the bell, Coke, Lennox, Otis, and a bunch of regional banks. Then after the bell, we've got PCA, Packaging Corporation of America. That might be a good read on cardboard. As far as the economy goes, and a bunch of regional banks as well. And tomorrow we start getting into the big FATMAAN mega cap names. We've got Microsoft and Google after the bell. So, and then we roll into Meta, Facebook, Amazon, Apple towards the middle and back half of the week. So it's going to be a huge week for earnings. So stay tuned for that. First off, I did a pretty comprehensive video yesterday, the Weekend Profit Navigator, where I went over the macro framework and I think most importantly, the indicators that I'm going to be looking at this morning and the rest of the day to give hints about if we've seen a capitulation low. I'm not going to go through all the oscillators and all the stuff I did last night. If you missed it, I am putting a link on the blog page. I recommend that you go there and look at that so you can follow along at home and kind of be ready. I will certainly, if I see something, I will let you know today with an email. And if you're not part of the team, if you're new here, first of all, welcome. But if you're not signed up for all my content, please do so, because I regularly send out notes midday and after hours with thoughts on the market and actionable information. So if you jump over to the show notes, you'll see a link to the blog site where you can drop in your email address, and then you'll be all signed up. You'll get all my emails directly to your inbox. You won't have to look for them on social media, and you'll also get an invite to the trading room. So let's move along here. What I'm going to do this morning is look at the indexes, the FATMAAN names, and then I'm going to look at the broker-dealer sector that is highly correlated to the broad market averages. So starting out on SPY, we had the two-day liquidation on Thursday and Friday. We are testing this uptrend line. We're set to open, at least at this point, down in this 422, 420 range, between the close on Friday and the February and March lows. I would have my eyes peeled on 415 for the March lows, and then we had that spike low down here to 410 in February. So watch those levels. Of course, we're going to probably gap down this morning, so don't get you're going to have that situation where you've got an open gap above where they may rally it simply to close that gap, then move down. And if you're a nimble trader and you're at your desk and it's what you do, if you got a rally higher to close that gap, then you've got a very objective short entry at Friday's close around right at 426. So be aware of that. And then, of course, the other scenario is they gap it lower and then keep going. So have those scenarios in mind. And again, referring back to the weekend video, you break this low here, break the February low, then that's where there's the potential for a real, panic mode to set in. I would not expect this to just slice right on through this without any kind of hesitation. I think at the very least, you'll get a hesitation, maybe a flat flag where it just oscillates for an hour or so before it gives way. But if it does go through with authority, you'll just know that there's going to be a lot of selling momentum behind that. If it doesn't even care about these prior lows, if it just blasts through, that'll be a strong indication that there's a lot of selling pressure, momentum behind the move if it can't even hesitate or put in a little bounce at these levels. Making another change this morning. If you've been with me a while, you're accustomed to seeing the 2-hour chart and then the 30-minute chart. I've decided to kind of streamline this presentation in the mornings to be a little bit more judicious with the time. I don't think going to a single 1-hour chart is going to make a monumental difference to the analysis. I still keep and maintain those charts. So if I see something on the 30-minute or the 2-hour that I want to make a point about, I will certainly show it to you. But let's be honest, if you're an active short time frame trader, even the 30-minute chart, you're probably trading, a 5-minute, a 15-minute, a 10-minute chart. You're probably not trading a 30-minute chart. And if you're a swing trader, fine-tuning your entries and exits with a 60-minute chart is going to be plenty of resolution for you. So I'm going to streamline our index evaluations and chart work just with the 60-minute chart. So here you can see the 2-day liquidation, really no green bars over the last 2 trading sessions, and now we're set to open here at around 422. I would be keying off of 426 and 415 this morning, and really in between is not really going to be actionable. You're in the middle of no man's land here, and unless you're really sharp on those opening ranges, I would wait for either a kickback rally to close the gap or to come on down towards 415, and then price can decide if it's going to put in a bounce or keep on going. Just be careful here in the middle, and if you're not comfortable trading that opening range, just let it go and find a level with known reactions along it, 426, 415, and then you can start your trading from that point. As we move to the Nasdaq or the QQQ, you can see that price is a lot closer to the critical February and March lows here at 318, and I've got a little support zone penciled in between 318 and 322. When I looked pre-market, we're down right in this 322 area now as we speak. So again, there'll be a gap above that'll need to get closed. Have that level 325.40 marked on your chart as closing the gap. And then if price were to move through this zone and get below 318, that opens the door to 309. And that's when and where things could get panicky. As we've been discussing, most of the pressure has been focused on the Nasdaq. Its posture is much weaker than that of SPY. SPY has those defensive characteristics, those defensive sectors, real estate, staples, utilities, healthcare, and the Qs are all offensive with the tech heavy names. So those are going to see the most pressure. And as long as the Qs can hold this 318, it staves off that panic move. And I do not think you would see SPY breaking the February lows unless the Qs are already past it. So I expect the Qs to lead to the downside if there's going to be some type of a flush move today. And don't forget to put in your this open gap down here from 298 to 305. I mean, just technically speaking, we know that gaps tend to get filled. We just don't know when. So, I mean, to me, that gap is going to act as a target. Now, there could be a ton of price action and time before we get to that level, but it seems like price is destined to make a run at these lows, and once it's broken, then I think price will come down at least to 300 to fill that gap. Here on the 1 hour chart, just a little magnifying glass on the support zone that I have in there between 318 and 322. Be ready for a bounce there. And then down here, it's actually off the page, but 309, I have a level of support there. Moving on to IWM, again, full bearish stack. All the EMAs, fast ones on the bottom, slow ones on the top, full bear look. Getting set up this morning to test this 190 area, and then we've got the February and March lows at 187.50. I would have my eye on that very closely. And then here on the 60-minute chart, you can see we've already broken down from this triangle setup. We lost a key level on Friday at 196.50. Now we're down in here testing this March 15th low at 191.50. You can see that there was actually a little reaction there as well. And then once we lose these lows here, then we have a ledge in the volume over price profile, and I think you'd see a fast move down into that 188 area. And I just want to go just show you, let me look for it here. Yeah, here's that weekly chart. I just wanted to reference real quick. Once you get below this 187.50, then that opens up a $20 wide technical target as long as we stay below that 187.50. So there's a lot at stake there, really everywhere across the board with those February, March lows. You break below that, then it opens up a whole nother avenue of potential selling. Starting here on Facebook, as we get into the FATMAAN names on the weekly chart, big leg down, kickback rally, right back down to the February and March lows. We've got the largest bar on the weekly chart, volume over price. So this is a big level here. Facebook reports on Wednesday. So the thing now is, if you're trading it, kind of decide what you're going to shoot for. There could be the school of thought is that, maybe traders think it's overdone here and you get a 2-day rally into earnings, or you could have longs getting even more panicky about a potential move at earnings. And it doesn't take any kind of an imagination to see an A, B, C type move that would bring it down into the COVID lows down in the 140s, as bizarre as that may sound. I mean, it's already at, 184, and you see the move here from 300 to 180. That's $120 right there. And if you take 120 from 220, you're even lower than that. So, you'd be even lower than the COVID low. So from a measured move basis, you lose last Friday's low, and you really got an open door for some lower prices. Apple has held up really, really well. I mean, yes, it's down for 2 days. Yes, it lost this little support zone at 163 and probably will head lower. But in the whole scope of things, it's still the 4-star general leading the pack, even though it's drifting down. What traders and market participants are really looking at is, do they finally come for the 4-star general? The Ponzi's and the frauds and the bubbles have already been hit. Facebook, Netflix have been hit. So one by one, they're getting to the upper echelons of the market on this sell-off. And if we go and look at the daily chart, I think the number to focus on for you longer-term traders is the 200 that comes in here at 158. You lose the 200, then that opens up 151 at this March low, and then you've got a large volume over price bar here at 148. Those are the downside levels that Apple could get to. And, if it held the line at the 200, I would call that a huge success. If it lost it, then you're going to start getting into the 150s and the 148s. And then, it kind of rolls downhill from there. So again, if you're an active trader, these levels have worked great. And you can see, the touches, the rejections, the breakdowns, everything has been happening along these lines of support and resistance that we've had marked for months. And they've done a really, really nice job providing a playbook for active traders. Tesla has been another one that has held up well. Thursday was the big gap up. They faded that, but held the line at 1,000. And then Friday, they actually held the line again. There was oscillation in the upper half of this trading range, but never lost 1,000. So that's your pivot point for today. I would regard a breakout above 1025 as a green light for longer. I would regard a breakdown below 980 as very cautionary and opening the door to lower prices. And as we pointed out in recent episodes, you've got a void in the chart here where under 980, I would view that as a significant breakdown and, you know, a good high probability, high risk reward objective trade to get short on a break of 980 and looking for the low 900s at that point. Microsoft already at the March and February lows here at 272.50. You break below that, then you open the door to a lot of selling, and you know, we're just going to have to see today how that goes. As I mentioned, they report tomorrow after the bell. If you're going to do anything with Microsoft, be nimble. As you know, 95% of the time I don't do anything with earnings. So if that's your thing, that's your call. Just remember that if you don't want to play earnings, at most you've got a 2-day trade, today and tomorrow in the regular session, and then they report after the bell. Amazon, working on this A, B, C move. I think at the end of the day, it comes down here into this 28.25 to 27.75 area. This open gap, I think, gets filled. Whether that's before earnings, I think they report Thursday after the bell. Whether that's before then or after earnings, I think this gap will get filled, and I think this 2700 area at the March low will get tested at some point. Just to show you the daily chart, here's that gap, and I think an important overhead level is 29.50, and that defines this $600 trading range where Amazon has been in for really a year. We had these breakdowns where 2,700 held, but I think price is going to come back down at some point, whether it's at earnings or a period after that, where that 2,700 is tested again. Google, devastating candle on Friday. I mean, we had talked about, watch this line here, man, at 25.10. It is held, you know, 1, 2, 3, 4, 5 times, and just kept knocking on that door. And Friday, it just let go. So Google reports tomorrow after the bell. I mean, as far as I'm concerned, it's already broken. So if there was some type of a kickback rally, you know, breakdown, back test, breakdown, and you got a nice kickback rally into 25.10 that stalled, that would be your very objective high risk reward type of trade, where you could put your stop just above and count on all this resistance holding and having it roll over again. So that's what I see on for Google. And you know, looking at the bigger picture, we had a $300 wide trading range here, more or less between 2,800 and 2,500. Now we've decisively broken below. So of course, if you break out of a $300 range, your target is $300 lower. So that brings us down to 2,200, and that aligns really well with a 38% fib pullback, and it aligns with this little value area where at the bottom of that is 2,200. And then of course there would be a decision point there as well. Does it come down to this level or come down to this level here? We'll have to wait and see. But you can obviously tell that this has had a major breakdown already well below the 40-week moving average, and that's a bearish setup. Here's Netflix. We had the big gap down that's distorted these charts. You've got a bracket trade between 212.51 and 248.70. So far, even with all the extra selling that we've had over Thursday and Friday, you can tell that a lot of this selling has been exhausted, as this has just, kind of dribbled lower from the first day of the gap down. So have that level, 212.51 alarmed, as well as 248.70 if there's a rally. But at this point here, you're just waiting for that alarm to go off. If you're interested in trading it, once you break below the opening range, then you just follow price lower. Moving on to semiconductors. Again, broke on Friday. Why? We had these prior lows right in here at 240. We had the March low, and then we had the touch actually earlier in March. So on the semis, we've had a series of lower highs and lower lows. So here's a high, lower high, lower high, lower high, a low, a lower low, a lower low, a lower low, and now a lower low. So that ABC, first leg down, bear flag, second leg down, is starting to make itself known, and you get a break below 235. There is a ledge of support here at 223, and then your second target is 215. I just want to show you the weekly chart. We're already at the 38% retracement level. Notice the large volume over price value area where that ledge is. That's at that 223 level. You lose 223, and you can see that nobody would be home. Not very much trading back here at all. And then you're left with these fib retracement levels down at 206 and then at 180. So holding that 223 is going to be really important. What I want to do now is jump into the IAI. That's the broker-dealer segment. Very highly correlated to SPY and the indexes. I've got the top components down. These names comprise 75% of the index. You can, of course, go to ETF.com or your favorite, ETF website and find out the exact percentages of these weightings. But I have written them in order. So what I want to do is just show you the top three of them, just to give you a flavor for what's going on. But if we look at the ETF, right here on a big weekly ledge at 92.5, you get a weekly close below that level. Things start disappearing really fast in terms of technical support. Now, the only thing that stinks about IAI is that it doesn't have a very robust option chain. I think on Friday I looked like 120 contracts. So I don't think the bid-ask spread is going to be worthwhile, or that's a good one to use. So I think you're going to have to go down to individual names. Here I've got Morgan Stanley sitting right here on the prior lows at 82.50. I think they've already reported. Please check that. But yeah, they had a big move up last week, and then that was faded 100%. So breaking 82, 82 and a half, I think you could come down to 70 rather quickly, and then you can see another big void in the charts. Goldman, big rounding top on last week, had a rally all the way up into 347.50, and that was faded 100%, closing back down at basically 320, and you can see the ledge of volume support. You can see back in the charts, this 320 has been a really, really important level. So you start losing 320, I think you're going to get a pretty significant first move down into the, just call it between 260 and 280 in that range. Whether it's 280 or 260, I mean, you're already in a significantly winning trade. If you get in on a trigger, here right in below 320, you've got an opportunity. Of course, go to the daily chart, fine tune this as far as an entry goes. All I'm telling you is this thing is on a big ledge along with a lot of the other components within the broker-dealer community. Here's Schwab. I mean, down 15% last week. Most likely that was earnings generated, but now it's down here at this big volume over price bar, and you lose, just working with round numbers here, you lose 67.50. You're going to get a fast move down into the high 50s, 57.50, 58, something like that. So I think you've got a very objective trade there. And then, of course, the nice thing is that earnings have already passed, so you'll be able to get in that and not have any earnings in front of you to kind of, get in the way. I want to wrap up with just a couple comments on ARK. You know that I'm short the ARK complex. I'm short, what is it, F, G, K, and W, ARK FinTech, ARK Genomics, ARK Flagship, and ARK Web. I'm short all of those. And Friday, they outperformed the market. So that was pretty cautionary to me. And that may mean, hey, we're just holding up here at the lows to see what happens. Or is the meat off the bone in the sense that this is as low as they want to take it, and the selling's over for now. Whenever you have a bad day of selling and you see relative strength in something that prior to that was leading to the downside, you got to take notice of it. And that's the only thing I'm passing along. I have not closed my positions. I'm still short. I think this is a terrible environment for the Ponzi bubble fraud sector. I think they're going to keep going here and keep selling. But if QQQ were to break the February, March lows, and this is still lagging, I may try to move to more fertile pastures. If, I would expect ARK, if things are selling off, at least be a market performer, if not lead the market to the downside. So I'm going to be watching that closely. So let's wrap it up there. Hope you enjoyed the video, and please go back and look at the weekend one if you missed it to check out the posture of the oscillators. It's really the only thing that can tell you what's going on in real time during a, if there's some kind of a panic move. So take a look at that. Keep your wits about you today. If you do feel yourself get panicky, step away from the screen for 5 or 10 minutes to regain your composure. And really what I found is the best thing to head that off at the pass is have a written game plan going in, because when it gets squirrely, you want to be able to look at those notes and refocus your mind on what you wanted to do and when you wanted to do it, rather than just looking at all the red on the screen and what do you want to do now. So write down that game plan. I think you'll do fine, and we'll see how it all pans out today. So this has been Chris Buss with Traders Profit Compass. Talk to you next time.